Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London sugar markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ice raw sugar in New York. With changeover and the weekly key reversal up seen 2 weeks ago, a point which I'll deal with shortly, we have the beginnings of some changes affecting this market this week. We used to have, over the last 14 weeks, two significant long-term patterns responsible for the market's actions. The first pattern is the breached and now broken bright green late September 24, late February 25 to the end of June 2026 bearish shift pitchfork. The bright green upper time, currently at 1441, had been tested a number of times in the past, but survived all the bullish pressures upwards bar the latest leap higher, when with changeover prices gapped over the bright green upper time as well as over all the moving averages, notably coming back today to touch down on top of the latest and nearest support, the virtually flatlining gold long moving average currently at 1469 and close to the March 21 low at 1466. The next pattern the market broke is similar to it. It is the more recent dark blue late March early May bearish shift pitchfork that complemented I should say, the other bearish pitchforks. Indeed, the dark blue upper time, currently at 1448, was complementary to all the upper times, whilst the dark blue middle time below, currently at 1390, was instrumental in supporting the market 2 weeks ago, as well as in late May. So it was a pattern to watch. Both these patterns are now broken, they'll be at least downgraded next time and probably retired completely. This just leaves the third, much larger, older and bigger, bright red November 23, September 24 bearish shift pitchfork, with the market challenging for a third consecutive day the bright red upper time today, and that's currently at 1492, and a gapping higher action move because of changeover. Up till now, the bullish incentive has never been strong enough to really test this upper time. The bright red mid sign is also some significant distance lower, which is currently at 1165. A third longer term feature has also showed up. We saw a break below it 2 weeks ago, but one that has not been sustained, matching lows made back in mid-April. It is the 61.8% 21st century absolute Fibonacci line at 1383. This had been support earlier in the year, in February and March, and again as recently as late May, but it does not seem to be working that well right now. Additionally, there's another point I'd like to discuss. It's the new pattern building up. A possible late March to date descending triangle pattern, utilizing the lows of April and last week as the base, and with the dark blue upper time acting as a proxy for the upper trend line. I added at this time over the last few weeks when I said, and I quote, "We're watching this idea very carefully, especially on any breaks higher," end of quote. I also added later on in the same commentary, and I quote, "So watch carefully, especially if we do have a new pattern such as a descending triangle pattern to contend with," end of quote. Well, this idea of a descending triangle pattern has not gone away, rather the argument has strengthened, but this has not helped in discerning where the measuring points should be. Thus, I will lay out two possible descending triangle patterns. The first is the smaller mid-April to end June action, utilizing the same base for both descending triangle patterns as the April 26 low at action, currently at 1322, with a dark blue broken upper time, currently at 1448 as the upper trend downtrend. And the second pattern is the longer term end of March, end of June action, having a bright green upper time, currently at 1441 as the upper downtrend. The first pattern has a primary target X in the 1600 area, with a secondary harder to reach target up X1 up in the 1682 area. Meanwhile, the second pattern has a primary target X2 up in the 1610 area, with a secondary harder to reach target X3 up in the 1703 area. Even a cursory glance can show you that whilst the primary targets are doable, the secondary targets look out of reach right now. This is where a new potentially third pattern comes in, and that is to regard the whole late May today action as a possible quite large double bottom pattern that is still in construction. If, and it is a big if we get up to the primary targets X and X2 and have consistent and consecutive closes over them, then we would have a double bottom pattern, and quite a large one, possibly even something more, but a quite large double bottom pattern with all the bullish implications that may have. However, first we have to get to the 1600 to 1610 area, and that is what we need to look at right now. Ice Europe white sugar in London. Not quite the same in London sugar here as in New York sugar, though we do have some interesting bullish tendencies here as well. 3 weeks ago we had a weekly key reversal down, which was immediately countered the following week, so 2 weeks ago, by a larger and obviously more powerful weekly key reversal up. Now, I had warned about the weekly key reversal down not being as strong or as important as first thought because of the other patterns that were evident around the market. 2 Fridays ago, prices broke up through the dark blue upper time, currently at 441.10, the late March, start of May bearish dark blue shift pitchfork. And what was important as this was important as the dark blue upper time shared along with the bright green February today uptrend, currently at 442.70, they shared a singular pattern, a sideways triangle, and that this uptrend could also be seen as part of a mid-April to late June ascending triangle, with the top being the approximate February 2020 high at 456.70. Thus, for the sideways triangle, we had a primary target at 773.70, a target already achieved, and a secondary harder to reach target up in the 495.60 zone. So not too far. Whilst for the ascending triangle, we have a primary target X1 up in the 493.30 zone, again not too far, and a secondary harder to reach target X2 up in the 508 zone. There was one other bearish pattern that was only broken last week and was the most important pattern here in the drive lower since early 2025. It is the bright pink September 24 to March 25 bearish shift pitchfork, which had been the showrunner for this market for about a year and a quarter, but which saw the upper pink tine, currently at 468.40, broken last week. We're trying to stabilize over this pattern this week, and if we do, then I'll retire the bright pink bearish shift pitchfork next time. So what do we have in the way topside that could affect the market's rise? Well, overhead, we have the April 2017 high at 489.10, which is capping prices right now. And beyond this, the extension to the old April to June 2021 head and shoulders neckline, currently at 503. However, I would look to the congestion from early 2017 around the October 22 low at 514.5 to look to as potentially significant. And then the interesting bright red neckline extension to the end of May, end of August 2023 reverse head and shoulders continuation pattern. That's a rarer head and shoulders pattern. That's currently at 528.10 as potentially being impactful. One important difference to note here when compared to New York sugar, there is no possibility of a reinforcing double bottom pattern here, I'm afraid. Sugar white premium spread. The market pressured higher for a second consecutive week, up over the 2013 high at 152.75 and over the dark blue upper trend line, currently 153.5 of the key recent pattern here. That's the dark blue February stroke March to date ascending expanding wedge pattern. It's currently 115.25 to 153.5. Last week I laid out some possibilities, not targets, but possibilities on the upside. And I quote, a primary possibility up in the 180 zone and a secondary harder to reach possibility, much harder to reach possibility up in the 200 zone. The last time the market managed to get up to the 200 level was back in September 2022. And then it was only a fleeting movement, so caution. I should also clarify that the reason for these possibilities and not targets as yet is that we have only had one single close outside the bullish expanding wedge pattern, and thus despite the strong move higher we have not as yet confirmed a break upwards. I have to admit I don't know what else the market could have done to try and confirm it right now. And that's the end of the quote. Well, since then the market formed an indecisive spinning top pattern, with admittedly a long tongue on top. But today, at the start of this week, we are lower, back within the ascending, expanding wedge pattern. Below, we still have the pair of 50% Fibonacci line supports from the July 19 to September 22 move and the August 21 to September 22 move at 128.75 and 131.75 respectively, as well as the June 2020 high at 134.25. Whilst topside, we have once again the 2013 high and other significant highs seen in September 2025 at 144.25 and July 25 at 151.25. So looking at it, one pullback pattern does not make a bear market, but it may in the future temper, possibly even help any potentials overhead. So continue caution. Now, I was thinking to end it here, but I noticed the possibility of another major pattern that could be in development, and this is a really big, start of Q2 2024 to date, really big double bottom, one that could be seen as the rarer big W pattern. The pattern will depend on its construction on prices reaching and stabilizing that important 180 even level. So it is not complete as yet, and indeed has some way still to be built, but it is something to bear in mind for the future, just in case. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.